Hi everyone, I'm Regina at Ace Plus Tax Resolution. Our firm's head is a CPA dealing with the IRS for over 30 years and also a certified tax resolution specialist. We help taxpayers resolve their tax problems with the IRS and states. If you're experiencing any tax problems and questions on how to get away with bank levy, wage garnishment, passport problems, refinancing, or selling your house under the tax liens, email us at james@aceplustaxresolution.com. Do you owe back taxes to the IRS or state and can't pay back? You may be able to settle the amount for a lot less if you qualify. Watch this video to find out the step-by-step guide for an offering compromise and what you need to do before submitting the application. Before we jump into this important topic, please make sure to share this video with someone you know and subscribe to our channel so you don't miss any valuable information or updates. Many taxpayers who owe back taxes don't pay back their taxes simply because they can't. The interest and penalties may have snowballed over time. However, there is a way to settle your growing back taxes to a substantially reduced amount through an offering compromise if you qualify. For the best chances of getting this offer approved, you must seek professional help so you prepare the right documentation and have right representation. An offering compromise is a settlement with the IRS or state tax authorities for less than the tax amount owed. It is not based on pennies on the dollar or percentage of your tax debt, contrary to what many advertisements state. It is purely based on your financial information. Financial inability to pay is the reason most offers in compromise are accepted. There are three types of offers in compromise. First, with doubt as to collectability, the taxpayer is unable to pay the balance owed in full before the collection statute expires, with the net assets and future income. Second, doubt as to liability is essentially making a case that the IRS should not hold you liable for the tax liability owed. One example is if you were assessed unpaid payroll taxes, while you had nothing to do with the business payroll processing. Third, effective tax administration is an offer where the taxpayer is able to pay the balance owed in full, but collection of the entire unpaid balance would cause the taxpayer economic hardship or would not be fair. Now, here is a step-by-step guide to give you an idea how the offering compromise process works. Step 1. You must be compliant with filing and payment requirements. The filing compliance requirement usually means that the taxpayer has filed their past 6 years of returns, and future year tax returns will not have an unpaid balance owed. Payment compliance requires that the taxpayer has sufficient withholding and/or estimated tax payments made so that they will not owe on future filed returns. Step 2. Gather your financial information. Depending on the taxpayer, the IRS may require documents to prove income and expenses for the past 3 to 12 months. Step 3. See if you qualify for an OIC. This qualification is what the IRS considers based on taxpayers' current circumstances. If they had the ability to pay their tax bill before the IRS no longer has the right to collect. The IRS no longer has the right to collect your taxes if the collection statute of limitations expires. Step 4. Determine the right offer amount. Once you qualify for an OIC, you can proceed to determine how much you will need to offer the IRS to settle. It's very crucial to strategize and select the most right amount for the offer. This step can also get complicated if the taxpayer has special circumstances, which require that the taxpayer needs part of the offer amount for future necessary living expenses. In special circumstances OICs, taxpayers will need to show why the OIC offer amount should be reduced to pay for these future expenses. Step 5. Stop and determine if the OIC is really the best alternative. If the taxpayer does not qualify or cannot pay the calculated offer amount, the taxpayer must seek another alternative. Step 5. Stop and determine if the OIC is really the best alternative. If the taxpayer does not qualify or cannot pay the calculated offer amount, the taxpayer must seek another alternative. Step 6. Gather supporting documents and provide them to a professional. It is common for OIC applications to have hundreds of pages of documents attached. Taxpayers are required to provide all financial account statements for several months as well as proof of income and expenses. Asset equity documents are also needed. It is highly recommended that you work with a skilled tax professional who can fully prepare your application and negotiate the best possible offer with the IRS. Step 7. The OIC application fee and OIC required payments. The taxpayer must include the OIC application fee, currently $205 but adjusted annually for inflation, and any OIC payment amount. Taxpayers who select the lump sum payment method must include 20% of the OIC offer amount with the application. Taxpayers selecting the OIC periodic payment method must submit monthly payments with or during the offer investigation. For low-income taxpayers, they may be exempt from paying the application fee and any down payment during the OIC. Step 8. Timely respond during the OIC investigation. This is the longest part of the OIC investigation process. Once the investigation starts, the OIC examiner may request additional information in which the taxpayer will need to respond timely or the application will be rejected. Step 9. Once an agreement is reached with the OIC examiner, you can finalize your OIC acceptance and final offer amount. The IRS will send an acceptance letter. Step 10. If the OIC is rejected, you have the right to know why and also the right to appeal the decision. Most disagreements are related to disputes over asset valuation or what the average income and expenses are. With some of our strategies that fit your situation and negotiation skills, the results and offer amount can vary. Step 11. Pay your accepted OIC offer amount. Once the OIC is accepted, the taxpayer will need to complete payment of the OIC offer amount. If a lump sum OIC was obtained, the taxpayer will pay off the offer amount within 5 months of acceptance, along with the initial 20% of the total offer amount you submitted with your application. For the periodic payment terms, the taxpayer will complete the offer payments within the 24-month period that began with the filing of the OIC application. While your offer is under review, a notice of federal tax lien can still be filed, but other collection activities will be suspended. The legal assessment and collection period is extended. You should still be making your payments on any existing installment agreements. Also, the offer is automatically accepted if the IRS doesn't make a decision within 2 years of the IRS receipt date. Step 12. Here's what you need to do next. There are 2 additional requirements in future years for an OIC. First, the taxpayer agrees that their next refund will be taken by the IRS. Second, the taxpayer must file and pay all of their taxes owed for the next 5 years. Failure to do so will result in the reinstatement of the taxes, penalties, and interest. Now, when it comes to getting a state offering compromise accepted, there can be additional variables. For example, the California Franchise Tax Board considers your age in addition to your financial circumstances. On the other hand, the chance of getting a Michigan offering compromise is much higher than for other states. Our tax resolution firm can help people with tax problems wherever they are in the country. That's the gist of the OIC process. This content is lengthy and complicated, but the savings are massive if the offer is accepted. You're free from the crushing burdens of tax debt and sleepless nights. ACE Plus Tax Resolution explores every option to reduce assets to their lowest value, so they will not be considered available to satisfy your back taxes. We'll explore all other payment options before submitting the offering compromise, because that is what the IRS will do. An OIC provides a considerable benefit because it closes the taxpayer's entire tax liability for the period covered. We have many successful closed cases of offering compromise. Please call if you would like to discuss whether you would be eligible for submitting an OIC to the IRS and state. Thank you, and we'll see you at the next video.
Our certified tax resolution specialist here at ACE Plus Tax Resolution has more than 30 years of experience in dealing with the IRS. Our firm helps both individuals and business taxpayers resolve their tax problems with the IRS and state through custom fit solutions. If you have any tax problems, please contact us. Our information is down below. Don't forget to hit the subscribe button to our channel so you don't miss any of our timely videos with valuable information and advice.